Let's begin by zooming in on what the market is expecting from this week's Fed meeting. As of now, the futures market is assigning just a 7% probability of an interest rate cut. That number tells us something important. Wall Street is betting almost entirely on no change. In short, the consensus is clear: Powell will hold steady. But just because markets are calm doesn't mean the political pressure has disappeared. In fact, it's quite the opposite. President Donald Trump has been vocal once again, urging the Fed to lower interest rates. He argues it's the only way to protect the U.S. economy from the growing impact of tariffs and rising import costs. However, even as he turns up the heat publicly, something changed behind closed doors. Trump recently made an important statement. He said he has no plans to remove Fed Chair Jerome Powell. That one line may have done more to stabilize financial markets than any rate cut could. After weeks of uncertainty, bond markets breathed a sigh of relief, and yields dropped nearly 20 basis points. Still, the underlying tension remains. This week's FOMC meeting isn't just about interest rates, it's also about credibility, independence, and the Fed sending a message. Powell now stands at a critical crossroads. On one side, political pressure demanding faster action. On the other, a responsibility to remain data-driven and independent. This meeting is an opportunity for the Fed to make that position crystal clear, that they don't respond to headlines or tweets, they respond to evidence and economic fundamentals. So as markets watch closely for hints, don't just look at the rate decision. Listen carefully to the language, the tone, and the message behind the pause. Because sometimes, not cutting is the most powerful signal of all.